thank you again for the invitation to be at the summit again this year. A lot has happened since I was last standing here 12 months ago, so it's timely to be back to talk to you about the new regime for financial advice, FSLA as it's been called here, which obviously kicks off in a few months. In terms of the new regime, I know that change can be challenging, so we appreciate that this requires time to help prepare and adapt and let things bed in. So on that note, can I acknowledge Richard and your team at the FSC, Katrina and your team at Financial Advice, to the FMA and also to MB for putting together or supporting these kinds of summits in order for questions to be asked, especially as we get to the business end of the change in the regimes. Ultimately, this is about, as Richard said, achieving greater consumer confidence in the sector and more positive financial outcomes for New Zealanders. And last year we passed the FSLA piece of legislation establishing that new way forward for your industry. And this new model is aimed at raising the bar and ensuring everyone who gives financial advice does that to the same standard. This is designed to give and reinforce for consumers that they can have confidence in the industry and lead to everyday New Zealanders being more engaged with their finances and making informed decisions that will improve their wellbeing both now and in the future. As you know, on June 29 this year, anyone who advises consumers will need to operate under a new licence, meet the new duties in the Act and comply with the new Code of Conduct. Transitional licensing for financial advisors, financial advice providers, opened in November last year, and I'm pleased to hear that many future financial advice providers have already applied for their licences and will be ready to go come June. Now, the final piece of the puzzle is around the disclosure regulations, which will be in place in the coming months. I understand we had nearly 50 pieces of feedback on that. So that once that is finished, you'll have everything you need for preparing for June. Also last year, I approved the new Code of Professional Conduct for Financial Advice Services, and I think you'll be hearing from Angus Dale-Jones about that in the next session. The new code will apply to anyone giving financial advice. It requires that clients are treated fairly, and the new code also requires advisors to act in their clients' interests, acting with integrity, managing conflicts of interest, and they must take steps to ensure their clients understands their advice, things that I think have been going on for a long time in your industry, but obviously codified in the new code. It also includes requirements to give advice that is suitable for the client and meets standards of competence, knowledge and skill. I'm sure you are all familiarising yourself with the new duties in the Act and the standards in the code, and to think about how you'll meet them within your own businesses. What I really want to emphasise today is why these changes are important, and a key focus for me is fairness for consumers. You and I know that financial advice plays an important role in helping consumers achieve significant milestones in their lives, as Richard mentioned. But research conducted by the Commission for Financial Capability found that 30% of us have lost sleep thinking about money problems, and 18% have had relationship problems because of money. Consumers who consult financial advisors are more likely to stick to their savings plan and avoid costly mistakes. And I think a key part of that is simply getting people to engage with their finances and making them aware of their options. And so this goes to the heart, for me, of the value of quality financial advice. My vision for the financial advice sector is for consumers to be able to have confidence in those who advise them and trust the quality of that advice in order for them to make what I have been banging on about for the last 2.5 years, to make wise, informed and motivated decisions for them and their families. I also want consumers to recognise the importance of financial advice for their financial well-being, and that it's worthwhile seeking that advice. And that is why the objectives of the new regime are to improve the quality of financial advice and, importantly, to improve access to financial advice. Another key focus in my commerce portfolio this year is the review of conduct in the financial sector. Following the ARC, the FMA and Reserve Bank conduct and culture reviews of last year of banks and life insurers, I've been looking into options to regulate the way that banks and insurers treat their customers. I want banks and insurers held to the kinds of standards that financial advisors are being held to. In December of last year, I introduced the Financial Markets Conduct of Institutions Amendment Bill to Parliament, and the bill introduces new conduct regulations measures, including a new conduct licensing system for banks, insurers and non-bank deposit takers, requiring those entities to meet high standards of customer treatment, and a ban on incentives which are based on the meeting of sales targets. My goal is for New Zealanders to have confidence that the financial products and services that they are buying will be appropriate for their circumstances and will meet their needs. And I want to ensure consumers are at the centre of interactions within the financial service providers, and to help banks and insurers restore and reinforce confidence in their industry. This will be a win-win for both consumers and the industry as a whole. That might sound twee, but if consumers don't have confidence, there are lost business opportunities and lost wellbeing opportunities for consumers. The bill is available on the Parliament website and should get a first reading later this week, and everyone will have the opportunity to make submissions to that bill during the Select Committee process, and I encourage you to give some feedback. There are a couple of other key areas of work in the commerce space that I did want to touch on briefly today. We know there are other regulatory settings that can be improved so that your clients are getting better financial products that meet their needs. So we are reviewing the insurance contract law at the moment, looking at things like the duty on consumers to disclose everything a prudent insurer might want to know. I want to avoid, for example, consumers being denied a claim for something like a heart attack because they didn't disclose an unrelated problem with their ankle. Cabinet made some important policy decisions in November last year, and I look forward to introducing an exposure draft of a bill for consultation later this year on that issue. The Minister of Finance and I are also reviewing the Kiwisaver default provider settings. As you all know, Kiwisaver plays a significant part in determining the quality of life and retirement for many New Zealanders. And I understand that around 400,000 New Zealanders are staying in conservative default funds, most likely without having made an active choice. So there's definitely room for us to make improvements. Submissions on our discussion paper on that closed in September last year. We're considering all the feedback received before determining options for ensuring that the default arrangements are as effective as possible for New Zealanders and their long-term interests. And finally, at the end of January, MB and the FMA released a discussion paper on funding for the FMA and proposed levies. I know this comes at a time where there's been a lot of other changes, including a recent review of levies specific to the new financial advice regime. This current funding review takes a broader look at how the FMA will be resourced to carry out its much larger workload, including as a result of the new financial advice regime. We also want the FMA to meet greater stakeholder expectations of its roles and activities, and the need for greater monitoring and enforcement of the conduct of financial markets participants. So I encourage you to have a look at that document. It's on the MB website, and provide feedback by the end of this month. It will help ensure that FMA is properly resourced and is the most fair and proportional manner of resourcing for it in terms of funding. I'm also very conscious that the finance sector has been facing a lot of changes over the past few years. However, this new chapter presents a great opportunity for all financial advisors and the wider sector to show that you have the customer at the heart of your business. As financial advisors, you deal day in, day out with your clients to help them decide how to prepare for their future and to protect themselves against the unexpected. And Richard was talking about resilience in terms of a financial sense, and I think we might have some questions about that later. You do have the power to make a very real difference, and a positive difference in many New Zealanders' lives. So I do encourage you to continue to have the conversations with your peers and the organisations here today to make sure you're ready to comply with the new requirements that operate under the new regime. There are a number of people in this room with valuable expertise to share, and who I've relied on over the last 2.5 years, who have given valuable input during the development of this regime. So can I thank you again for inviting me to be here this morning. I'm happy to answer any of Richard and the audience's questions. Thank you.